traders, this is Michael coming to you from GammaEdge on Thursday, September 14th. We're going to be doing our pre-market morning strategy session. We'll be taking a look at the market structure heading into today and overall the balance heading into OPEX. We'll also be taking a look at our tick market model as well as pre-market price action as we've had some PPI news out this morning.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
So we'll go ahead and jump right into it with the PM settled complex. PM settled complex here, all expiries turned on. Again, negative gamma condition, which would lead us to an in the money and out of the money put above and below spot price condition. Most notably is transition. You will notice as I go through all the expiries here in all of our charts this morning, transition is very narrow, 44.75 to 44.80. Easily to set your plans for today into Friday and then possibly even into next week as we look ahead after OPEX. Getting above and staying above transition 44.80 will be extremely important as it always is that we discuss here at GammaEdge for upward movement. 4,500 to the upside again will probably be the most likely sticking point. Advancement to the upside will be difficult with a significant amount of puts above us, and we also have out of the money puts below us. We need to see total call speculation take over. That would be an erosion of these in the money puts and out of the money puts. And you would need to see calls start filling in these places. To the downside, 44.50 is very important. If we get below 44.50, then we possibly could see more weakness down to 44.25, and then 4400 would be that last line in the sand. Again, 4500 to the upside will most likely be an area where we'll see some stalling. Again, transition will matter heading into today and the balance of the week. Above and below will be significant. You can see 44.75 there at the N trans and then 44.80 at the P trans level. 0DT heading in today, we are in positive gamma condition, but we do have a significant amount of out of the money puts below us, a significant amount of in the money puts above us, and then we have just a few calls right above transition levels surrounding spot price. So again, where spot price lands today throughout the day, oscillating back and forth around transition, will be extremely important heading into the end of the day. 44.60 to the downside, it looks pretty important here as a possible sticking level, and then making much advancement of 4,500 will most likely be difficult as you see the deltas drop off pretty significantly all the way up there to those in the money puts above us. So again, takeaway for today would be range bound between 44.50 and 4,500. If we break one of those ranges, a significant move to the upside will most likely be dampened unless we see targeting on the vol-u/vol-d command, and then to the downside, getting below 44.50. Substantial move below that will most likely be difficult unless we see a total erosion of calls and put speculation come in significantly. Plus one DT, again, you can see transition very narrow as we've already discussed. Spot prices below transition here, but again, we have in the money calls below us, out of the money puts above us. 4,500 sticking out pretty significantly there. 1.8 billion heading into Friday, and then to the downside 44.50. You see those in the money calls come in, which will be supportive demand type action. Below 44.50, we could see a little bit of weakness down to 44.25, and then 4,400 obviously is the line in the sand to the downside. Not really anticipating us to get down to 4,400 because the in the money calls supporting us here. But again, a significant amount of in the money puts above us. So again, making headway to the upside will most likely be limited and dampened pretty significantly unless we see a total erosion and structure change of this heading into Friday. Here is the Thursday and Friday together. Again, narrow transition, 4,500, very well noted, and then 44.50 to the downside. Again, in the money calls below us, in the money puts above us. So again, transition extremely important, and then the balance of the week. As you can see, we're pretty well stuck in between these two stalemates of the puts above and the calls below. So again, transition and the narrow range will most likely continue into Friday. And then after Friday, if we have a possible unhinging or unpinning of all of these positionings, then we may get a larger directional move. Again, noticed here on the AM settled, noting where we're at within the overall structure and where these two levels are at. Again, puts above us and calls below us, significant amount at 44.50, 24 billion net delta there, and then 4,500, 48 billion net delta to the upside. So again, stuck between these two levels is most likely scenario A, 44.50 to 4,500, even into the expiry, and then after OPEX, understand that we may be able to unpinge or unhinge from this stalemate as these will most likely structure will change, and then we'll get a more directional move. Here's the combo complex. All expiries turned on. Again, you'll notice the transition actually drops, and then spot price is above the transition, so this is important. Again, a significant amount of puts above us, calls below us, positive gamma condition. So again, stuck between 44.50 and 4,500 is the most likely outcome and scenario. Here's Monday's expiry, as we noted on open mic last night. It was a little bit stronger, as we were discussing last night, is weakened a bit. Negative gamma conditions. Again, 4,500 to the upside, a little bit wider transition, spot prices below that transition. 44.30 to the downside looks pretty important if we get below 44.50, and then targeting at 4,400 down here. Again, just a hodgepodge. We have calls above us, we have some puts and calls below us. So again, just kind of a broken structure above and below spot price. So we'd like to see this kind of get a more directional look. As of now, we just kind of really be stuck between these two with a little bit more slight edge to the bearish bias, because this is weakened due to out of the money put speculation to the downside, and then the erosion of calls above and below spot price. Here's the balance of next week. Again, negative gamma condition, which means you are put dominated above and below spot price, but you can see we do have a significant amount of calls above us and then a significant amount of puts below us. So again, that stalemate almost continues into next week, so hopefully we'll get some resolution and directional look. 44.70 to 44.90 transition. We are below transition for next week on spot price. So again, moving above transition and holding above would be the scenario where we possibly could get some advancement to the upside. But again, it will most likely be dampened because of the structure we have at the moment. Here is our market structure heat map. Again, make sure you're referencing this channel, noting where we're at in the delta states and how we're changing and transitioning from greens to yellows. So again, this is just a more of a balanced state instead of a call dominated state. Again, sectors here, it's just kind of a mix. We'll note the call dominated sectors and the put dominated sectors. Make sure you're understanding how these transition and which sectors you should be looking at if the market decides to turn and tick decides to turn up. Again, liquidity stocks, looking for the states and the state changes and understanding what those are. Again, the call dominated stocks, if tick starts to cooperate and the market structure changes to a more call dominated state, you should be looking at these stocks first to start moving up, and then the stocks that are transitioning into call dominated state. We're going to introduce a dashboard here that we're working on. We're going to be refining this in the GammaEdge plan, and this will be part of your morning review. Basically, this will just give you the overall look for the full complex, PM complex, 0DT, 1DT, and rest of the week, and where we're at within those dominated states, and understanding if we're mixed or puts are in control. This will kind of give you a kind of red light, green light type look to it, how far we are for spot price, and then obviously our market model trend here is bearish to the downside, which we'll review in just a minute. And then we'll have notes here, and then you'll be able to put your additional notes here. So our thought process is that you will have this every morning. This will be filled in, and then you can edit it yourself for additional thoughts, bullish and bearish scenarios, and then any times of key economic dates. And then you'll also be able to set up your own watch list over here for liquidity stocks or other stocks that you're looking to trade that day. So this will just be a quick look, an overall general review of how the market structure looks, kind of a one-stop shop dashboard along with our web app that will allow you to have a quick reference sheet to be able to understand where we're at in the overall market structure. We'll go ahead and look at the tick structure via the morning call PDF, which has been posted. Summary is here. Make sure you're looking at that commentary. But again, as I spoke last night on open mic, and I spoke yesterday, as well as basically the balance of the week, tick is still extremely weak. We cannot get a close above a previous day close. which is extremely important. That we'll have to see that first to get any look or upturn in the market whatsoever. These red lines have denoted the previous day closes, and as you can see, we continue to make new lows below the previous day close on each of these, and previous day open there as of yesterday. So again, we need to at least start turning back to the upside and making a close above a previous day open or even a previous day close to start turning back to the upside. Market model cumulative tick railroad track again continues down, negative slope. Slope is actually increasing back to the downside at the end of the day. So again, risk off in the overall market. Red below cyan, again, market model is off. Again, negative slope continues to increase to the downside. So we do not see any flattening yet whatsoever, which would lead to consolidation and a possible turn back to the upside. So again, complete risk off in the overall market via the tick market model, which again has been back tested. Again, intraday volatility, remember that this is highly prone to failure because of negative slope. Market model is off, red below cyan, and railroad track down. So again, any turn back to the upside, I would be highly suspect in the overall market structure until we start moving above the moving averages, starting to see the slope flatten out, and then an overall change in the market structure from in the money and out of the money put dominated structure to an in the money and out of the money call dominated structure. So we'll take a look at the pre-market price action. We did have PPI. We came right down to yesterday's pre-market level yesterday, high. We bounced off of that, at least on SPY. Transition heading into today will be extremely important. As I said, 44.75 to 44.80. We need to get above that and hold. As you can see, for multiple days, we've just been oscillating around that transition level. So that would be my if this, then this scenario for today. Above 44.75, possibly push up towards this 44.95, 4,500, where I would see most likely a cap on the overall price action. And then to the downside, watching that 44.50. And COTMP will be down here also if we get any morning market weakness. So hopefully that helps. Let's make it a great Thursday. I'll be in the Discord in a few minutes if anybody needs anything. And thanks for joining us.